Thomas Sowell is one of my favorite people to read, and to me, he's got the best definition of inflation, which is just too much money chasing too few goods. And so, whether it's because people are making money or their salaries are inflated or the government's printing, 50% of the money in existence in the last 18 months, whatever. I think we can all agree inflation is a real thing. It's a really dangerous thing because it makes stuff more expensive and there's too much money chasing too few goods. So I am of like two minds. And you tell me which one of these minds should be 51% instead of just 50-50. Mine number one is like, okay, this inflation, the stock market being at an all-time high, the housing market being at an all-time high, something is going to crash. I should be hoarding cash, have a bunch of dry powder, because if I would have had $500,000 in 2008, 2009 to buy triplexes in Atwater Village and single family residence in Hollywood Hills and $200,000 houses in Eagle Rock, I would be rich beyond belief because I could have got a loan. I still had a job. And, I should be keeping all that powder dry in cash, feeling great. That's like 50% of my mind. The other 50% of my mind is like, well, if I keep my money in cash, inflation is going to eat away with it. The government is going to find ways to continue manipulating the market to keep prices low and debt high, and they're just going to keep printing money. So if I don't deploy all that cash now to assets, houses, Rolex watches, the stock market, whatever, if I'm not hoarding assets, then I'm just falling behind 5 to 10% every year because inflation is eating up my money. And it's like every day I have analysis paralysis. It's like, should I go all in on being an asset class owner and owning assets because inflation is just going to make me rich on paper over the next 3 years? Or is it going to crash in the next 3 years and I should be hoarding cash so I can buy property and stocks and everything at a discount? And this like legitimately keeps me awake at night.
So I would say the thing about door number two being true is the assumption that things going to keep going. And there are, I think, 120 cargo ships waiting to come in. So normally when the Fed made extra money, and again, they can say it's not making money because they're buying it back, but they're manufacturing currency. There's a few things that keep me up. Number one, because of multiple reasons, and we don't have to, it's on all politics, but because of multiple reasons, the supply chain is not able to get you the thing you want to buy. So before, when they made all this money, our economy just expanded. You just bought more stuff because you had more money and you could get it. Well, I know people that have clients, they do roofing and siding. They have clients who need roofing and siding. A storm came in. They have the employees, because that's even a hard part to do right now, having employees. What they don't have is the actual roofing and siding. They don't have the siding because some resin place in Mexico is didn't get something from DuPont, and it'll take 9. And so I said, how bad is it to this guy? And it's like, I furloughed 50 people. They won't take a purchase order for 9 months. They're so behind that they won't take a purchase order. I'm like, well, can't you just get siding from somewhere else? Like, they're all doing it. So again, because of all this extra money, if we can't put it into the economy, that's when really bad shit happens. The other thing is, there's 50 and 80-year cycles. So my role in the company is chief wealth strategist. So I'm supposed to have all the answers. And all I do is I really try to look at the board as it is, not how I want it to be, and not how I think it should be. I got to kind of see what's there. So in every revolution, agricultural to industrial, yes, your job changed, and maybe you retired as a farmer or you sold the farm and just lived off that, but your kids at least had a place to go to work. It was in the factories now because farming wasn't where it was going to be. So you got educational, you got the agriculture going to industrial, and now we're at whatever's next after digital. That's where jobs aren't going to be. I have, again, that same client with the multiple franchises. When Biden got elected, I said, so what are you going to do if they raise minimum wage? Within seconds, he sent me the invoice for the kiosk. He's like, I'm going to lay off a third of my people. They're going to get a kiosk. They're going to build their own sandwich. I need someone to run the restaurant, someone to clean, and someone to cook. No one else will have a job. So those things haven't happened to the point where we see it. But there are, and if you add in artificial intelligence and blockchain, people with MBAs that have white shirts and ties that go to work that never been laid off in their life because they're not the worker bees. They're up there, not the CEOs, but they're right up there. They're not going to have a job. Private equity right now is going into companies that have nothing to do with each other other than one's a supplier to the other vendor, and they're putting in private blockchains. And they're saying, okay, if 80% of your business of me is to you and for you is to me, we're going to buy, the private equity is going to buy both businesses, lay off both of our accounts receivable and both our accounts payable, put in a private blockchain, and business will go, but with a third of the people. But we have a steel mill down the place, still open, doing just as much as they did in the 80s, but where they had 3,000 people, they have 50 pushing buttons and in the Homer Simpson in the thing. So all of these trends are ahead of us. I am more bearish on what's going on. So I wouldn't say cash is the best place, because obviously inflation's in there. There's some short-term places for cash. One of the things I found out about that I didn't even know, I know public companies and I know private companies and I know preferred stock and I know common stock. What I didn't know is a public company can offer private preferred stock. Because when my dad died, it was everything that my grandparents went to my parents, went to me. There was something special about that money. And it was 3 years ago. So I wasn't necessarily going to go in the market, again, all-time highs. My wife wouldn't let me put it on Bitcoin, which was probably smart. But it was the last of the Hubler's money before it got to me. So I had to find something relatively safe to get me through the election, to get me through whatever comes after the election, which we're living now. Not even know when COVID was going to be on the radar. So I found private preferred stock. It's a 5-year. I'm stuck for 5 years, but I have zero common share volatility. And it pays 5.5. So again, not a life-changing thing, but that's something that is dry capital for me. I think in year 5, whatever shit's hitting the fan will already be splattered by then. Hard assets, if you buy them right, but I think you can buy them right by not buying them right now. So I sold my Pocono house after 5 years. It doubled in price. And I didn't, in the Poconos, you don't buy real estate to double in price. You just buy it and hope it's worth what you paid for it 10 years later. And I sold it. And there's a thing called a opportunity zone tax credit. Yep. And if you go into an opportunity zone fund, you don't have to pay the capital gains. So I sold this thing for twice what I paid for it, but I don't want to pay taxes. And so you go into an opportunity zone fund. And again, you got to be accredited. So sadly, these are not things for everybody. But it comes out after 10 years at 3x tax-free. And that code and that tax code is going to be gone by next year. So it's not something that we can do forever. So what I tell my wife is I tell her right now, someone's overpaying for our future lake house. And I will be more than happy to take it off his hands 3, 4, 5, 6 years from now. Right. So as long as you have that longer term strategy, the buying opportunities aren't here yet. I think if you buy something now because you're afraid it will go up more, that's exactly what a bubble is, except for the bubble is everywhere. It's in, you put, dental floss in Amazon and next day it's worth $4 more because you didn't buy it and you didn't lock it in. And one of the things that we've been told and lied to, frankly, about it is that the inflation's transitory. So if you have a rental, you raise your rents, I raise my rents. When inflation goes away, quote unquote, I'm not going to lower my rent. And my employees, I have to pay them a certain amount for them to show up for work. I'm not going to go back to them, and nor would anyone go back and say, okay, now that inflation's not here. So every place that inflation really shows, other than in products, but in the big things that matter, what you pay for your home and what you pay for your rent and what you get paid, those things aren't going anywhere.